No, there was something else. So it was all it was Bitcoin lacking fungibility and privacy, and then there was a big push for Zcash, right? So it's just like if there's any cycle, it's a cycle of FUD, right? And the same old narratives come back again and again that Bitcoin's big. There's a big problem with Bitcoin because it's not private, and then people are pushing Zcash on the market, and then of course the quantum FUD. Quantum computers are going to kill Bitcoin, and it's dangerous. And you couple that with people's just natural apprehension of a 4-year cycle, like going to the down leg of the cycle, and it all kind of pushes Bitcoin price lower.
If you found this helpful, please like, subscribe, and turn on notifications for more insights into the digital asset space. Your support boosts the algorithm and helps this channel grow immensely. Drop your thoughts in the comments below. Thanks for watching and enjoy the rest of the video. Samson Mow made waves when he initially predicted Bitcoin would reach $1 million per coin. Now he's upgrading that target. His new number? $1.33 million. Why 1.33? Mow explains it with a touch of humor. The number 3 is considered lucky in Chinese culture, so 1.33 has a certain ring to it. He even floated $1.88 million as a possibility, though he acknowledged that number might stretch credibility for mainstream audiences. So 1.33, it is a figure he believes is not only achievable but arguably conservative. Here's where his reasoning gets compelling. Mow argues that Bitcoin, at its current price, is massively undervalued relative to its fundamentals. By his analysis, if Bitcoin had experienced even a similar run-up to silver, which nearly tripled or quadrupled in recent years, Bitcoin should already be trading between $200,000 and $300,000 per coin. That's a striking point. Gold nearly doubled, silver surged dramatically. And yet Bitcoin, despite being the only asset in the world with a mathematically verifiable finite supply cap of 21 million coins, has lagged behind. Mow believes this is a temporary pricing anomaly and that the gap will close violently and suddenly once the market truly internalizes Bitcoin's scarcity. His thesis is simple but profound. Metals have already had their run. The next wave of value migration will flow from gold and silver into Bitcoin. Why? Because unlike those metals, Bitcoin's supply is not just limited, it is quantifiable, auditable, and immutable. No government can secretly mine more of it. No mining company can suddenly increase output beyond the protocol's hard-coded schedule. That is a feature no precious metal can honestly claim.
I was predicting 1 million for a few years, and I think it is time. It is time to increase the number. And 1.33 sounds like a good number, right? 3 is a lucky number in Chinese. So
6 would be better, or 8, yeah.
yeah, but 1.88 might be on the high side. Not really. I don't think so, but I have to kind of pick a number that people think might be kind of reasonable. So 1.33.
What do you I love how you haven't hit your original target price and you've upgraded it already.
Yeah, because I think Bitcoin is undervalued. I think at the very bare minimum, we should be 200, 300,000 right now, right? If we had a similar run up to silver, that would be where we're at. So why can we outperform metals? Because metals already ran. Gold almost doubled, and silver, tripled, quadrupled. That's they've done their run. So I think they're going to decline, and Bitcoin will start to capture some of that value, because unlike gold and silver, there is actually a finite amount of Bitcoin, right? And it's quantifiable. And you have buyers of last resort like Sailor and soon BSTR and others that are just going to buy Metaplanet, right? They're the
Tether as well, yeah.
Yeah, Tether as well. The rate of accumulation. But speaking of Tether, Paulo is overdue for a buy. You have to tell him, like, smash buy. Smash buy. But the rate of accumulation is just incredible at this kind of bear market territory, right? In the 60s and 70s now, it's still like they're raising capital like crazy to buy. Sailor's buying billions every week. And I don't think people understand that is not sustainable. The saying, the greatest trick the devil ever played on the world was convincing the world that he didn't exist. The greatest trick, the Bitcoin markets has played is they're convincing people that there's unlimited Bitcoin and paper Bitcoin can suppress price indefinitely. But I don't think that's true. You're going to see a suddenly movement, and everyone's going to be like, oh, yeah, Bitcoin is scarce. And yes, there's a lot of demand for Bitcoin, and there's still a lot of demand for Bitcoin, right? This is why I don't think cycles matter. If you look at the landscape now, like, when have we ever had a buyer that is completely insensitive to price? That has never happened before Strategy and other treasury companies emerged, right? No, there was something else. So it was it was Bitcoin lacking fungibility and privacy, and then there was a big push for Zcash, right? So it's just like, if there's any cycle, it's a cycle of FUD, right? And the same old narratives come back again and again, that Bitcoin's big. There's a big problem with Bitcoin because it's not private, and then people are pushing Zcash on the market, and then of course the quantum FUD. Quantum computers are going to kill Bitcoin, and it's dangerous. And you couple that with people's just natural apprehension of a 4-year cycle, like going to the down leg of the cycle, and it all kind of pushes Bitcoin price lower. Not really, and I think it should not surprise anybody at this point. If you look back at the history of altcoins, especially like Ethereum, it's just hack after hack after hack, and as the ecosystem has grown larger, you see more and more hacks too. So it's just more reason to be Bitcoin only, and a lot of people miss this point. The Bitcoin maximalist mindset is not that we don't like we don't well we don't like the other stuff, but it's more about protecting your time. Sailor has the famous quote, guard your energy, guard your time. And that's really what it's all about. Do you want to always be chasing after some gain, some yield on some DeFi stack that's recursive in nature? Or do you want to buy and hold Bitcoin and have peace of mind? So that incident that you're talking about, I kind of am aware of something that happened, but I have no idea what the details are. I know it's like some recursion and some funds are trapped, but I don't know exactly what happened, nor do I want to know exactly what happened, because that's just the same thing that has been happening for the last decade. And, your most valuable resource is your time. Why do you want to care about these things? Why not just buy the one immutable, decentralized asset and sit on it and enjoy your life? Yeah, I would definitely say there is kind of a wall between the Bitcoin side and the everything else side. And it is kind of a barrier. Like, I don't know a lot of those people, and I think they don't know a lot of the people on this side too. Probably they know Sailor. They can't not know Sailor, but you go one step down into Adam and others, and they're just oblivious. Or maybe they are aware, but they don't care. Similar to the way that we don't care about some DeFi protocol guy. If you ask me who made I don't know, pick something, Uniswap. I don't know who made it. That's the kind of wall between the sides. The story of the grasshopper and the ant, right? So, do you want to prepare? And to prepare means you're doing a very long-term outlook, planning for the next 20, 30 years, maybe 50. And the cycle for politics is much shorter. It's 4 to 5 years. And within that 4 to 5 year cycle, there's maybe 2 years that you are quite productive. The first year, you're consolidating, reorganizing. And the last year, you're concerned about re-elections, or you're leaving and you don't want to risk anything happening. So within each 4 to 5 year political cycle, there's maybe half of that to work with. And within that period, it's like you're fighting for attention to plan for a long-term economic project that has a risk attached to it: political risk, economic risk, and just reputational risk. So that is kind of why I believe it's very challenging to get nation state adoption, unless the head of the state is a Bitcoiner and they understand it and they've gone down the rabbit hole. But that's not the norm. Like, if you look at Bhutan as an example, they had a very large lead because they mined so much Bitcoin. And then recently, I think in the last few months, they've been selling it. And I'm not sure why, because they could have borrowed against it. They could have done many things. They could have monetized it through selling options. And that's just not what we've seen. So I think you're kind of fighting for someone to understand Bitcoin and to think about economic growth in this angle of adopting a new form of money while they're worried about other things, or they're involved in some war or conflict and they have to appear on the world stage and like say things that we're going to help defend or we're not going to defend. But it's just a constant struggle, and you kind of have to couple that with a just the innate inability of people to understand money. And there's an interesting AI article that came out the other day, which is some AI models are solving these mathematical problems that have been unsolved for maybe 100 years or more, around that level. But these mathematical problems, every mathematician, they're saying they took a wrong turn when they encountered that problem. And because they took that initial wrong turn to solve the problem, they never solved them. And that's why they are unsolved. But AI models are able to reason through it in a totally different, unhuman way, and they solve these problems. And I think there's a direct parallel there to Bitcoin that, you know, you have to have this weird genetic mutation that you're interested in privacy, sovereignty, bearer assets, the truth, mathematical purity, computer science, and you have all these kind of mental genetic mutations, and you kind of fall down the Bitcoin rabbit hole, and you understand Bitcoin, and other people just don't. They might have one genetic mutation, which is mental genetic mutation, which is they like hard assets, and then went the other way as the 99% of or 100% of mathematicians in that case, but they go down the road of gold and they think gold is great, and they can't get over this mental hurdle that there is something newer and better and is world changing.
Perhaps the most underappreciated part of Mow's thesis is what he calls the structural shift in Bitcoin's demand side. For the first time in Bitcoin's history, there are now buyers who are completely price insensitive. These are entities, companies, and institutions that have made a strategic, almost philosophical commitment to accumulating Bitcoin, regardless of where the price sits on any given day. The most prominent example is MicroStrategy, now rebranded as Strategy, led by Michael Saylor. Saylor has been raising capital, billions of dollars, and deploying it almost exclusively into Bitcoin purchases week after week, even in what many would describe as bear market territory, with prices in the $60,000 to $70,000 range. Other companies are following: BSTR, Metaplanet, Tether, and a growing list of corporate treasury adopters. Mow describes this as a phenomenon the market fundamentally misunderstands. There is a widespread belief, sometimes called the paper Bitcoin narrative, that synthetic, unbacked Bitcoin exposure through derivatives and ETFs can suppress the price of Bitcoin indefinitely. Mow flatly rejects this. He draws on a famous quote to make his point. "The greatest trick the devil ever played was convincing the world he didn't exist." In the Bitcoin world, the equivalent trick has been convincing the market that Bitcoin supply is effectively unlimited. That paper Bitcoin can always substitute for real, on-chain Bitcoin. Mow believes this illusion will shatter, and when it does, the price response will be sudden and dramatic. Scarcity will assert itself.
It can, and there are creative ways to solve all these types of problems. Bhutan, I'm hopeful too that they can do it. I mean, it is in their own best interest to create some sort of Bitcoin instrument like this. But there's other countries that we're talking with and we're engaging with, and we've been helping them draft proposals and run ideas back and forth. But I think it is inevitable that some country will do something. It might be the States, who knows? Because if you look at the state of the world, debt is increasing. The US is nearing 40 trillion in debt, and that's not slowing down. The bigger it gets, the faster the interest is going to be. And there is really no way to grow out of that. So you kind of have two avenues here. One is the AI super growth phase. I think that's the Elon Musk route, that AI will supercharge everything. The economy will grow 100x, and GDP will grow massively. And then you have the other more um, more negative view, which is there's going to be some major problems there. Debt is going to increase faster than economic growth and GDP, and there's really no way out of that. And that means there's going to be a big correction in the markets, and you know equities will go down, bonds will take a hit, and who knows what's going to happen then. Is it a recession or a depression or a Great Depression? Nobody really knows. But I think the thing that we do know is that the government will try to avert that no matter what they do. And I believe that Bitcoin is an avenue to achieve that goal. If you transition from one economy into another economy, a fiat economy into a hard asset economy, you can avert that crisis. And I think that is what they will end up doing. They will need to create some sort of Bitcoin backed instrument to sell debt. And it might look something like STRC. It might look something like a Bitcoin bond or a Bit bond. I'm not sure. But Bitcoin is the only growth channel that lets us avert that monetary crisis. It could be, well, so let's look at what he's got. He says he has like a quarter of a Bitcoin personally. Right? He said that publicly. SpaceX has Bitcoin on balance sheet, which means now they've absorbed XAI and X. So that whole SpaceX conglomerate with AI and social media, it has a Bitcoin treasury or Bitcoin reserve. Tesla, I think, still has some. They sold some, but they still have some in their reserves. They're probably like in the top 100. But he has his toes in the Bitcoin pool. And I think he's got to come to the realization that he needs to protect himself, right? Like, he fought hard for Trump to get elected, and he probably angered a lot of people on the other side. And
all of Canada, yeah.
Yeah, and yeah, that too. But Trump's term is ending, and it's unclear what's the procession of power transfer. Is it Democrats in the next term, or is it Republicans or a third party? Who knows? But what we have seen is countries and states are getting more desperate. So the reason why I predicted he would get into Bitcoin in a big way is because of his friends in California, the All In podcast guys, Chamath, David Sachs, and
Jake Al.
Yeah. The other guys. They're getting hammered by California, right? California was trying to impose this billionaire wealth tax, and I Chamath posted, like, they have a provision in there that they can just shift it to other people, right? It's being pushed through as a way to tax the billionaires because that is palatable to normal people, but they have a provision to just get normal people too. So you can see the desperation there, just like you have this desperation in Canada to somehow stimulate economic growth out of nothing, because we don't have much outside of Alberta and natural resources like forests and whatnot. But California, what are they doing? They're running a massive deficit. They don't have enough money, and they need to get money, right? So what does any government or administration do? They try to tax you, and they tried, and I think they're failing because a lot of people just left. But you can't have this level of this very high profile wealth grab attempt happen to Elon's friends, and Elon not register it in his mind that could be me next, right? Today it's California, and yes, you can move to Florida, yes, you can move to Texas, but what about later on? Like, where do you flee to? I think there's like a story, Peter Thiel bought a mansion in Argentina, and people are saying, yeah, he's like ahead of the curve and he's going to move to Argentina. But things change, governments change, and political ruling parties change. And there is only one thing that helps you avoid that, and the answer, right? It's gold. No, just kidding. It's Bitcoin.
It's technical. Yeah.
Yeah, it's technical. But you
One of the most misunderstood aspects of the Bitcoin maximalist worldview is the why behind it. Mow is clear. It is not tribalism. It is not a rational hatred of other cryptocurrencies. It is a rational, time-oriented philosophy about where to focus your most precious resource, your attention. He references Michael Saylor's famous directive, guard your energy, guard your time. The altcoin ecosystem demands constant vigilance, yield chasing, DeFi protocols, recursive lending strategies, and an endless stream of hacks and exploits. Mow points out that Ethereum's history, in particular, is a chronicle of breach after breach. As the ecosystem grows larger and more complex, the attack surface grows with it. More users, more hacks, more money, more incentive to steal it. Meanwhile, the narratives used to undermine Bitcoin cycle predictably. Bitcoin lacks privacy, enter Zcash. Bitcoin is slow, enter some layer 1 competitor. Bitcoin can't be hacked by quantum computers, enter quantum FUD. Mow notes that these talking points are recycled every cycle, deployed precisely at moments of market weakness to amplify fear and suppress price. His conclusion: the Bitcoin maximalist chooses to opt out of this game entirely. Buy Bitcoin. Hold Bitcoin. Stop wasting time on distractions.